This is Craeynest. Welcome to Europa and Actua TV. Well, how all the delays on the negotiations between Greece and its European partners are affecting its economy and how Greece's economy is affecting Europe. Let's see some interesting viewpoints from the chief economist of Econopolis, Mr. Bart van Craeynest. Mr. Craeynest, welcome. Regarding the negotiations between Greece and its European partners, everything seems to has been stuck for with an extension for a deadline by the end of June, and where they ended up to agree on Wednesday, the 10th of June, is each side to concentrate on its proposal, and let's hope that we are going to have a deal by the end of the month. All these delays, what kind of consequences they do have regarding Greece's economy?
Well, obviously all these delays have no positive consequences for the Greek economy because there's a lot of uncertainty about what's going to happen in the near future and even further. The uncertainty linked to the Brexit and what have you. And this means that the economy is basically stalled. All the indicators on the Greek economy suggest that they are now back in recession. So the Greek economy today is about 27% smaller than it was in 2007. And things are still deteriorating because with all the uncertainty there, people are not going to invest. Companies are not going to invest if they don't know whether Greece will still be in the euro in a couple of weeks' time. And people hold off on their spending. And you still see that people are withdrawing their funds from the banks and trying to get the money out of the country, I imagine. And that's obviously not very helpful for the economy. So basically everybody also in the Greek economy is waiting to see what's going to happen. If we get a deal and the uncertainty clears up, then people can go forward again. But as long as that's not the case, the Greek economy is only going to deteriorate further.
You said that now this situation is blocking the investments because the environment seems not to be safe.
Yep.
Can we say that is not safe, or it seems that is not safe?
Well, nobody really knows. I think there's a significant possibility that Greece will leave the euro in the near future. It's not by no means certain. It's still very much equally possible, I would say, that they reach an agreement, let's say, on the last deadline. For me, it's about 50-50 between those two. As a company, if you have to make a decision now on investment and you have this kind of uncertainty, well, you're not going to make the decision.
The country had postponed the payment of the IMF also by the end of this month. What consequences have this for Greece's economy?
The postponement of the payment to the IMF, which was a rather small payment, to be honest, and a small postponement because we're only talking about a couple of weeks, doesn't really change anything. I think everything is being focused on the deadline towards the end of this month, the end of June, and either it will be solved by then, or there's a serious problem, and then the Brexit becomes a very serious possibility. But it's all this waiting, it's all this uncertainty combined that is really the big problem at the moment.
What would a Brexit mean for Europe?
Let's say in the short term, I don't think there's really a lot of problem for the rest of Europe. Most investors, most companies have moved out of Greece and have severed the links they had to Greece. So the direct impact is probably limited, and also in financial markets, I think most of the parties involved have stepped away from investments in Greece. But in the longer term, there are significant consequences. The euro was started as a monetary union where it was impossible to get out of. Now, if one country gets out, being Greece, at this point in time, well, you can never again say no country can get out. And if in the future, then let's say in 5 years' time, there's a new crisis in Europe, I'm not predicting that, but at some point in time in the future, there's going to be a new crisis. And then the pressure for countries to look at the option to leave is going to be there, which it wasn't in the past. So I think if one country gets out now, this really opens the door for other countries to follow, not in the near future, but maybe in the longer term. And that obviously also depends on what happens to Greece after they would get out. If they get out, and let's say in 3, 4, 5 years' time, their economy prospers again, but then obviously exit becomes a viable option also for other weak countries within the Eurozone. So it's really, the short-term consequences are probably okay for the rest of the Eurozone, but it's the medium and longer term where we should really be concerned about.
As I can understand, the estimation of yours is that it is going to be more of a credibility problem rather than a financial.
Yeah, I think the financial problem is behind us. For the rest of the Eurozone. For Greece itself, it's another story. But for the rest of the Eurozone, there are not a lot of private parties that still have significant investments in Greece.
There are no economic factors attached with Greek economy?
There are, but no, there's still economic... but the big problem was in the financial sphere, like banks who had exposure to Greece or other parties, investors who had Greek bonds. Well, over the past couple of years, everybody has moved away from that, and most of the bonds are now in the hands of the ECB or the IMF, and they can withstand it. An exit, well, they have more means to withstand the consequences. So I think the near-term consequences are, for the rest of the Eurozone, not trying to downplay it, but I don't think it's a catastrophe in the very short term. It might even be that you see some relief for the rest of the Eurozone, where the idea with some people is obviously we have a very weak link in the Eurozone being Greece. Once they are out, the rest of the group is stronger. In my opinion, that's not necessarily correct, that assessment.
And why?
Because opening the door for one country opens the possibility that in the future...
For the same reason, yeah.
Let's say in 5 years' time there's another boom-bust situation in Spain or Portugal or Ireland or France or whatever. And then you can no longer say, well, they can never get out, because people and financial markets especially will say, yes, but Greece got out. So maybe that's also an option for them. And if it's an option, financial markets will have to take that into account, and you will get self-fulfilling processes in financial markets that can really push a country then to the exit.
Well, in the meanwhile, the government of Greece had asked to postpone the negotiations a bit if they don't agree by the end of the month, and continue the program of the previous government. How do you comment on that movement, politically speaking and economically speaking?
Yes, well, a short-term postponement or extension of the current program for a couple of months or even half a year obviously doesn't really solve anything. It just buys a little more time, but on the economic front, I think that's not a good idea. As I already mentioned, the real problem is the lack of confidence, the uncertainty about what's going to happen. And if you then get just a postponement for 6 or 9 months, well, the uncertainty is not going to disappear.
What are you saying now? In a way, it means that the program that Greece was the previous month wasn't efficient?
No, there were serious problems with the last program, that's obvious. It hasn't done what it was supposed to do, not fully.
As a program or from Greece itself?
From both sides, I think. From both sides. But for the economy, it's really important to get at least the idea of some clarity about what's going to happen. So if you can make a deal on a new program for the next 5 years, that's okay. If you do it for just a postponement for the next 5 months, that's not okay, because nothing is really going to change in 5 months or 6 or 9 months. You're not going to solve everything in those couple of months, and you're going to have again the negotiations like you have them now, with a lot of political posturing. And for the economy itself, you don't give any visibility, you don't take away any of the uncertainty, and you just keep this kind of stalling of the economy in place. And what you will then see probably is that the Greek economy will sink further down into recession. Either they need clarity. The Greek economy needs clarity. Either you get a program, a longer term program to stay within the euro and solve the current mess, which, to be honest, should still be viable. It's politics more than economics. On economical terms, it's still very much possible to get to an agreement, I would say, but the politics is another thing. But if you don't get that, then every time extending the deadline with a couple of weeks or months doesn't solve anything.
Yes.
Then it would be better to actually just say, okay, we end it here and we get out.
According to your personal perspectives, an honorable compromise, an efficient program, how can we build that program? Which would that be?
Yeah, well, again, I think the current problems are mostly political. There are economic challenges, but it's possible to get answers for those. In my opinion, the best solution would still be for Greece to stay in the euro, to make new commitments on structural reform, and to get relief on the debt situation. And relief on the debt situation, in my opinion, would best be organized in terms of you link the repayment schedule on Greek debt to the performance of the economy.
And how do you comment on the measures that the European partners suggest to Greece?
Yeah, well, now it has been political posturing for the last couple of weeks, months, where on the one hand Europe wants stronger commitment on reform, on the other hand Greece wants less commitment on reform, and you just have to seek middle ground there. It's clear, I think for everyone it's clear that the Greek economy cannot continue as it is doing today.
Let's say that Greece is making structural reforms. But on the other hand, it has very high taxes, value-added taxes, even in primary commodities, and increases in the electricity, and low-paid pensioners that don't even get any social solidarity benefits anymore. How can you compare that?
To be honest, the tax levels, tax revenues in Greece are still fairly low if you compare it to most other economies, if you take the total. Maybe they are high on some products and lower on other products, but if you take it as an average over the whole tax structure, they're still fairly low. So there is room to go higher there. That's going to be negative for the economy, but let's be honest.
The thing is that the salaries are too low. They are, as you said, they are quite low in total of the European Union, but they are quite high comparing to the wages.
Yes, but if you take the overall tax structure and you compare it to the size of the economy, it's still fairly low. That has to do not only with the levels of the taxes, but also with the efficiency of tax collection, which is still an issue, obviously. But you have to actually, you should look a little bit beyond that. What the Greek economy needs above anything else is economic growth. If there's no perspective of return to economic growth, the debt situation or the deficit situation or the tax situation is never going to be resolved. The way to move forward is to try to restore growth, and so you need to focus the structural reforms on that. More flexibility in the labor market would probably help in that respect, but there's no miracle solution. It's going to hurt. Every solution is going to hurt at this point in time. Exiting will also hurt. And it's going to be fairly difficult. There's no easy, well, it's clear that there's no easy solutions for Greece, but up until a couple of months ago, you had a reasonably positive dynamic. Economic growth was turning positive again. There was progress on deficit. There was progress, limited, on the structural reforms, but in any case, structural reforms, they take a long time to organize. Now with the whole actually since the elections and with the whole renegotiation of the program, you have raised this big ghost of uncertainty again, and everything has fallen flat again. So you need to get this. First of all, there needs to be a decision. Yes, we're going to stay in the euro, and then we're going to go forward and we're going to make an agreement with our Eurozone partners for the next 5 to 10 years, that we don't have to hit these negotiations every couple of months or every couple of years. That doesn't solve anything. And then yes, you're going to have to move on structural reform. For me, I would go more towards structural reform by making labor and product markets more flexible rather than focus on the deficit pure in itself. If you fix the growth or get some growth back, you will see that the deficit situation will also improve. But you need to make a choice, and you cannot do everything together. If that's your question, I agree with that. You cannot raise taxes, cut pensions, and reform the labor market all, let's say, in a couple of months' time.
Yeah.
That's not going to work. That's going to kill your economy. So you need to have a long, if Greece gets out of this situation within the euro, so solves their current predicament but stays within the euro, it's going to take a long time. We're not talking about months, we're talking about years.
Yes.
And for me, it would be a good idea to link the debt repayments to the strength of the economy, to the economic growth. In that sense, if economic growth returns, then speed up the repayments on the debt. Then it's possible because you have economic growth. But when the economy goes back into recession, you cannot keep pushing on the debt because
this means that the European partners should be more flexible on terms such as time.
Yes.
Wait for the payments.
I think yes. I think both parties need to be more flexible. I mean, the latest negotiations are not helpful. If everybody stays to their points, core Europe wants more reform and more on the debt repayments and the deficits, while Greece doesn't want that. Well, if everybody stays on its position, you're never going to get a compromise. You need to get compromise. And time is something that is there. I mean, now that the debt is in the hands of the ECB, most of the debt is in the hands of the ECB or other official partners, there is time. The ECB can afford to spread the debt repayments out over a longer period of time. There's really no problem there. In economic terms, there's no problem there. The problem is political, and the mistrust between both parties, the fact that core Europe doesn't see Greek promises towards reform as credible anymore, that's a huge problem. That's politics. And on that front, I don't have any solution either. But if you're not going to have some kind of trust between both parties and some kind of flexibility between both parties, you're never going to get a compromise. And that only leads one way, and that leads to an uncontrolled exit of Greece out of the Eurozone. Where in the longer term, for Europe, that's not a positive thing. For Greece itself, it's very bad in the short term. In the longer term, not so clear.
I have to sincerely thank you.
You're welcome.